Welcome, it's Denome. In this video, we're going to take a look at the inflation rate of United States and why I think the inflation rate will actually go almost down to zero by June of 2022, and it can even go negative in the near term as well. So in this video, this is probably bullish news for a lot of investors because many investors are waiting for a Fed pivot to go back into money printing and to start lowering the interest rates which combats the inflation rate. So in this video, we're going to analyze all these things and then come to a conclusion on what's likely to happen, in my opinion. So I have a lot of charts. Let's start from the United States inflation rate and build the case for what I just said about my prediction. So anyway, this is the inflation rate of United States, and I put it to the maximum. So you can see this started before the World War II, and inflation rate, it sometimes peaks and then goes down, peaks, goes down, peaks, goes down. Here in the 70s, it peaked, went down, peaked, and then went down significantly. And now we've had 40 years of steady inflation until just the last year. So if we take a look at the last full year, you can see these inflation rate numbers, 7.5%, 7.9%, 8.5%. So this was on a steady climb until the June of 2022, and then it started to decline. And I'm just predicting that this will continue to decline just because of how these numbers are made out of. So these numbers are actually just numbers that are coming from the United States Consumer Price Index, CPI, basically. So what they are doing is that they are comparing the CPI number of, for example, November of 2022, comparing it to the November of 2021 number. So that's how these numbers are coming. And as you can already see, the CPI numbers have flatlined since June of 2022. So as long as the CPI numbers continue to stay flat, that means that the month that we are comparing this month or the next month, that's coming closer to the last year's number. So if as long as this continues to go flat, that means by June of 2023, the inflation should be at zero, and it can even go negative because the pendulum it tends to swing to extreme inflation and then to even deflationary numbers. That's how the governments always work. They overreact, and then it goes both ways. So anyway, this is basically the reason why I think inflation will end by June of 2022. And there are other indicators also that we can take a look at. We can take a look at, for example, the World Container Index, which shows how much it costs to import or export stuff with containers on the sea. So as you can see here in 2020, 2021, the cost of shipping went up significantly. But if we take a look at the newer numbers, which are from 2022 downward until December 22nd, you can see that the prices for those same containers are now down to $2,110 or $127 or $19. And this number, if we compare it 2,100, it's basically exactly the same it was pre-pandemic. So that means that the inflation rate that we had on shipping costs has now come back down to pre-pandemic levels. And if you take a look at your energy prices have gone down significantly in USA and in Europe as well. Even gasoline has become cheaper. It's not as cheap as it was before the pandemic, but it has become much cheaper. So the supply lines, the logistics side has basically re-established itself on the current situation. So all these prices have gone down, which in my opinion signals that this will continue to stay flatline, these consumer price indexes, because there's no pressure to put these prices higher anymore. So for these reasons, the inflation rate will probably stay the same or I mean the inflation rate will continue to go down, but the CPI number will probably stay where it is at the moment. And it can even go down because as a result of all these things that are happening, the interest rates have just skyrocketed. And right now, if you take a look at the 30-year mortgage rates, you can see that the 2008 we had about 6.5% rate for the mortgages, and at right now, this is the monthly view. So we've had a few months already of the 6.5% interest rates on the mortgage sides, and whenever the cost of loaning capital is high, it means that people are avoiding uh, investments where they have to take a lot of capital as a loan, and they are not sure if they can make a profit out of it. So these things, it causes the housing prices to go down, and it also causes companies to cut costs and to also lay off people. So for these reasons, in my opinion, it starts to look like there will be the recession in United States and even globally in Q1 or Q2 of 2022. But afterwards, we can take a look at this chart here. George Cameron covered this chart a few days ago in his own channel. That was a very good video. But this is the 80 years of M2 money supply growth versus the inflation rate growth. So as you can see, there's a soft inverse relationship with the inflation rate and with the M2 money supply growth rate. So during the pandemic, if we go to the last 3 years here, you can see we had this crazy, insane money printing, which caused all the assets to bubble. And after the M2 money supply growth rate has just plummeted. And now we had this peak inflation here. And if we take a look at how these inflation rates and the M2 money supply work together, I would expect the M2 money supply to start growing and the inflation rate to go down for a while. And there may be a second shock later on, like we had here in the 70s, 80s, with the inflation after the new money printing starts again. But as of right now, what I'm just expecting is for the inflation rate to go down. We already saw the 1.7 trillion omnibus spending bill by the U.S. government. So M2 money supply should grow on the next reading as well, and I'm expecting all these things to play out at the same time. But with the let me see where I had it. The United States new home sales, as you can see, because of the rising interest rates and with the lack of easy monetary policy, the home sales have just plummeted, and I'm expecting the housing markets to continue to crash down as the interest rates rise, because there will not be as many buyers anymore. And I'm expecting for the earnings reports of publicly traded companies to start showing a little bit, lowered sales. So when they show lowered sales, I'm expecting investors to actually panic and to sell their stocks at some point also. So what I'm expecting at some point is that the pendulum of the inflation will go to may even go to the negative side, not even to go close to zero, as we can see here. It can even go a negative for a while, as you can even see it here. If you compare October 2022 to November 22, you can see that there was slight decline in this one. So if you were just to compare the inflation rate between these 2 months, that was a negative inflation, which means deflation. So at where things are going right now, it seems to me that the pendulum is swinging towards deflation at the moment. But at some point, the M2 money supply will come back, and that's when we will see a market recovery, at least for a while. So that's basically my scenario at this moment in time, is that eventually we will see zero inflation, and until Q2 of, or until Q3 of 2023, I think cash is a very good investment, because there's not really any reason to believe that the markets will just suddenly recover from this downtrend. We do have some bullish divergence on the RSI on the weekly view of S&P 500, but I'm not expecting any crazy recoveries and a new bull run just suddenly while all these earnings reports are coming out and the inflation rate starts to go down. But eventually it may also happen that nothing crashes, that we would just go sideways and the Fed actually pivots. And when the Fed actually pivots and starts bringing the interest rates down, I think that would be a very good buy signal. But as of now, I think you can accumulate, but have a good cash position as well in case we see a big institution crash, like we almost saw in Great Britain at the end of last year, when a pension fund was almost about to bust, and the UK government had to come out and print money and basically pivot on their own. But the Fed has not done that yet, so we still have to wait until that actually happens. So for now, I would advise caution. Accumulation is probably decent at the very, very low prices, but anything can still happen. But I would expect the crisis, the worst of it, at least be out by June of 2023. So the next 2 quarters, probably we will see a recession announcement followed with a lot of money printing as well, and that's basically a start of the next cycle. That's just what I'm guessing right now. Don't take this as an absolute certainty that this will happen. I just showed you the data where it's leading and also some analysis of the situation. So a crash, a recession, and then a recovery. That's basically my best case. Anyway, that's it for this video. Consider subscribing to this channel, and I will see you in the next video.